What's the deal with credit scores and how much does it really matter? Hey, I'm Rusty Mortgage, here to talk to you about credit scores, specifically in the mortgage world. And let me preface this by saying that your Credit Karma score, or the score that your credit card is telling you have, that's not your mortgage score. Mortgage uses a specialized scoring model, and it will always use your median or your middle score. And what happens if you only have two scores? Guess what? It's going to use the lower of the two. So first, let's talk numbers. Generally, conventional loans are going to require a 620 and above, and FHA or VA 580 and above. But that's really more of a gatekeeper concept because banks can set their own minimums above what the agency will accept. And in those cases, if your score is lower than the minimum, then you're going to be ineligible or denied. These are what's called bank overlays, which is kind of just saying rules on top of rules. So next, let's look at credit scores from a risk rating perspective. The agencies, and when I say that, I'm talking about Fannie Mae, Freddie Mac, FHA, VA, USDA. They all look at scores as a risk rating. The lower your score, the higher the risk. So while that 580 score doesn't make you ineligible for an FHA loan at many banks, it doesn't mean you're going to get approved for a loan. If you're higher risk, you're going to need compensating factors like lower debt to income ratio or a larger down payment or more reserves after closing, or perhaps all of the above. So mortgage approval looks at your score as one of many components of your scenario, but it's not the only factor. In other words, just because you have a score that is above the minimum requirement, it doesn't mean you can get a mortgage loan. I've definitely seen this more when somebody has limited credit or maybe just very recent derogatory credit. Last, let's look at the cost based of credit score. What agencies have are what are called loan level pricing adjustments, or LLPAs, which just means the higher the risk, the higher the cost of the mortgage. And that can include a higher rate or more upfront costs or both. Fannie publishes a very detailed LLPA matrix that starts at 639 and brackets every 20 points up to 780. FHA and VA, on the other hand, really don't add LLPAs until you're below 620. And keep in mind, scores can swing massively from one month to the next, especially if your credit card utilization is high. In my younger days, I once saw my credit score drop by 70 points in 1 month because I made a large credit card purchase. But guess what? It was back up to normal the next month after the credit card balance had been paid off. Do you want to know about how to improve your credit or your credit score? Let's talk. Drop me a message in the comments and I'll be happy to connect. Thanks.